James, you see this when you take the Muni yield divided by the Treasury yield, and you were just at 60%. Do munis at these valuations feel a little bit overbought?
Yeah, Taylor, I think they're overbought for at least the very near term. Remember that we have a different tax season this year than we've had in the past because of COVID. So we'll likely get some technical pressure in May. But to your point, there's such a dearth of yield and safe assets out there that the municipal space has attracted a lot of interest. And those yield ratios you mentioned, 0.6%, they're even more dear the shorter end that you go. So there's a lot of people just trying to find anywhere to park money. The system's awash in deposits. Banks don't want your money. Loan growth is very, very slow. So municipals have attracted not only the retail attention, but a lot of crossover interest. And that's why those yield ratios are so dear relative to historic.
I'd love to talk about the crossover ratio. We've heard in the last few days, at least within the Treasury space, you're finally starting to get the Chinese and the Japanese buyers back into the market. Do you start to see some international, some of that crossover, maybe pensions, insurance companies back into the muni market as well?
Yeah, Taylor, we certainly do. And one of the things that we're looking at is the amount of oversubscription on new issue. It's extraordinary, 5, 10 times oversubscribed for a new issue municipal bond. And as I mentioned earlier, inside of 5 years, we're talking about yield ratios inside of 0.5%. And it goes back, I think there was a story that you all ran just maybe an hour or so ago. We're at all-time lows in LIBOR. So when the system is aflush with cash, as Chairman Powell was just indicating, and all these deposits and all this stimulus is flowing through the financial system, there are literally very few places to put it. And so the municipal market has been the beneficiary of those flows and really had pretty good performance year to date, despite the Treasury market selling off.
You are located in St. Petersburg, Florida. Everything I hear, people are leaving New York. We have a 52% tax rate for the top earners. They're coming down to the beach. They're joining you in Florida. How much of your conversations are around maybe a repeal of that SALT cap, maybe higher taxes coming down the pike?
Yeah, well, there's 2 points, and one is we do have the beneficiary of a lot of migration. In fact, there are anecdotes of Californians and New Yorkers buying off unlisted property. But we do think of SALT as a big deal. We think there's likely to be some repeal of that, but we also think marginal tax rates are marching higher, maybe not quite as high as the market is pricing in. So again, technically speaking, we think the muni market probably relaxes a little bit in the May-June time period. And again, we have an upward bias on long-term interest rates, so we're cautious here generally on duration.
You know, there's always been a debate in the world of muni land about what constitutes a green bond or not. We're kicking off Earth Day, of course, tomorrow, and Biden's climate agenda. And we have conversations about infrastructure, increasing the electric grid, improving wastewater, all of which were in his infrastructure plan. Are those constituting as green bonds to you? Are you seeing a huge flood of record green bonds coming in different areas of the municipal market?
Yeah, we're going to see an uptick in the label of green bonds. Here at Eagle, we have our own internal matrix that we use for environmentally and socially conscious securities, and that's well documented and well known by our clientele. But we do think there's going to be a significant uptick in infrastructure. There's going to be an uptick in spending at the federal level, and in issuance in munis will probably pick back up in the second half of the year.
Final question, credit or duration?
Well, if I had to pick, I'd pick credit because the flood of money going into credit is working. It will continue to work. The BBB Muni Index was up 2.5% last month. Duration is going to be a problem because we have inflation. We have the longest lead time in supply delivery that we've had since 2000. And we have the consumer spending. So we have a gap between what we're producing and what is being consumed that's going to show up in real inflation in the back half of 2021.